The world is full of brilliant people who are living paycheck to paycheck. You see them every day. The engineers, the PhDs, the creative geniuses, and the strategic thinkers who can solve a complex differential equation or write a symphony, yet their bank accounts remain stubbornly stagnant. It feels like a glitch in the matrix. We are taught from childhood that intelligence is the ultimate ticket to prosperity. We are told that if you are smart, you will work hard, and if you work hard, you will be rich. But the reality is far more haunting. High intelligence can actually be a financial trap. In fact, for many, their intellect is the very thing keeping them broke. Today, we are going to deconstruct the hidden psychology behind why the smartest people often make the worst financial decisions. This isn't about lack of opportunity or bad luck. It's about the complex cognitive biases, the curse of knowledge, and the emotional battleground that exists inside a high IQ brain. If you've ever wondered why you're smart enough to know better but still find yourself struggling to build wealth, you need to listen to every word of this. The first reason smart people stay broke is what psychologists call analysis paralysis. When you have a high capacity for processing information, you don't just see an investment opportunity. You see every possible variable, every potential failure point, and every historical outlier. While a less analytical person might see a solid index fund and start investing, the smart person is still researching the macroeconomic impact of interest rate hikes in the 1970s. They become addicted to the information gathering phase because it feels like progress. But in the world of money, information without execution is poverty. Wealth is built on compounding, and compounding requires time. While the smart person spends 3 years trying to find the perfect entry point into the market, the person who simply started with a basic plan has already gained 3 years of growth. Intelligence often creates a fear of being wrong, and in the pursuit of being 100% right, smart people often do nothing at all. This leads us to the arrogance of the intellectual. When you are used to being the smartest person in the room, the one who got the best grades, or the one people come to for answers, you develop a dangerous sense of confidence in your own logic. You begin to believe that because you understand the mechanics of how things work, you can outsmart the market. Smart people are the ones most likely to try and time a bubble or pick a single winning stock because they believe their superior research gives them an edge. They ignore the most fundamental rule of money. The market is not a math problem. It is a giant mass of human emotion. You can be right about the numbers and still go broke because you didn't account for the irrationality of everyone else. Being too smart often means you are too proud to follow the simple, boring paths to wealth that actually work, like automated savings and low-cost diversification. You want a sophisticated solution for a problem that actually requires a simple one. Then there is the social status trap. Smart people enter high-pressure professions, medicine, law, academia, or corporate management. These environments come with a silent but deadly tax, the expectation of looking the part. This is the psychology of conspicuous consumption among the elite. When your peers are all driving luxury European cars and sending their children to elite private schools, the pressure to conform is immense. You feel that your intellect entitles you to a certain lifestyle. You justify the $5,000 watch or the oversized mortgage as investing in your image or rewarding your hard work. But wealth is what you don't see. Wealth is the money not spent on status symbols. Many smart people are high-income broke. They earn $200,000 a year but spend $205,000 to maintain the facade of success. They are running on a hamster wheel of their own making, terrified that if they stop, the world will see they aren't as successful as their degrees suggest. We also have to talk about the over-optimization of life. Smart people love efficiency. They want to squeeze every bit of value out of every dollar. While this sounds like a good trait, it often leads to penny-wise and pound-foolish behavior. They will spend 4 hours researching how to save $50 on a flight, but they won't spend 10 minutes automating their retirement contributions. They focus on the micro because it provides an immediate hit of dopamine, the feeling of winning a small deal. Meanwhile, the macro of their financial life, their career trajectory, their tax strategy, and their long-term asset allocation is a mess. They are so busy optimizing the small things that they lose sight of the big levers that actually move the needle. One of the most profound psychological hurdles for the intelligent is the moralization of poverty. In many academic and creative circles, there's a subconscious belief that money is somehow crass, or that wanting to be wealthy is a sign of lower intellectual or moral character. If you grew up in an environment where people praised intellectual pursuits while looking down on salespeople or businessmen, you may have an internal thermostat that shuts down your earning potential. You might subconsciously sabotage a promotion or a business deal because you don't want to be one of those people. You are using your intelligence to rationalize why you don't have money, rather than using it to acquire it. Furthermore, smart people often struggle with the expert trap. Because they are experts in their specific field, they assume that expertise carries over into finance. A world-class surgeon might think that because they can perform a complex heart bypass, they can surely manage a portfolio of volatile options. This is a cognitive bias known as the halo effect. Financial management is a specific skill set that has very little to do with your IQ and everything to do with your temperament. In fact, high IQ can be a liability here because it makes it harder for you to admit you don't know what you're doing. Instead of hiring a professional or following a proven system, you try to DIY your way to wealth using a mental model that doesn't apply to the world of money. Let's talk about delayed gratification gone wrong. Smart people are usually very good at delaying gratification. It's how they got through school and difficult certifications. However, they often delay it so long that they develop a deprivation mindset. They spend 20 years sacrificing, and when they finally start making money, the dam breaks. They overspend as a psychological compensation for the years of missing out. Or conversely, they become so addicted to the grind that they never actually learn how to make their money work for them. They think the only way to earn is through labor, through smart labor, and they ignore the passive systems that allow wealth to grow while they sleep. Finally, the most dangerous psychological trait of the smart and broke is complexity bias. Smart people find simple things boring. If a financial plan can be explained on a napkin, they think it's too simple to be effective. They seek out complex tax shelters, obscure crypto coins, or intricate real estate syndications because these things match their level of intelligence. They want a challenge, but wealth building is fundamentally boring. It is the repeated action of saving a portion of what you earn and investing it in productive assets over decades. It is a game of patience, not a game of wit. The smart person's desire for complexity often leads them straight into the arms of high-fee advisors and get-rich-quick schemes disguised as sophisticated opportunities. To break this cycle, you have to realize that your brain is a tool, but it is also a filter that can distort reality. You must decouple your self-worth from your intellectual status and begin to look at money as a game of behavior, not a game of skill. The smartest thing you can ever do with your money is to realize that you aren't too smart to follow the basic rules. Stop analyzing, stop overcomplicating, and start executing. Wealth doesn't care how high your IQ is. It only cares about your discipline. You have the engine of a Ferrari in your head. It's time to stop driving it in circles and finally hit the open road.